for that. So to begin with, I think from my perspective, I come to a lot of these events and I still find that I learn something every time. So tonight, to hear the phrase Insurosaurus, I think deserves a round of applause. Yeah. So come on. Yeah. So I think that's pretty awesome. And it leads us nicely into the first question, which I'm going to pose to Jenny, which is about, we're talking about this new technology, we're talking about the culture of insurance companies and so on. Jenny's been heavily involved in the projects with XL Catlin and with B3I. How do you actually get your company to begin to get on board with blockchain train?
I guess, yeah, there's definitely a challenge involved in persuading some people in the company that blockchain is something that we should be investing in. But I suppose I could probably start with how I got our company interested and how we became part of B3I and how we became part of the MESC, the Marine Blockchain Consortium. I guess towards the end of 2016, I wasn't actually working in Accelerate, which is our corporate innovation function, which isn't just pure PR, I promise. But I was buying reinsurance for XL Catlin on the outwards reinsurance side, and I was getting increasingly frustrated with all of the inefficiencies that I was seeing, all of the reasons that we've already talked about today, that you talked about. We've got paper-based transactions, we've got different contracts with different brokers, all of those contracts are going out to different reinsurers, people are making changes, we're using people, spreadsheets, emails to keep track of all of those changes. And actually, I started thinking, right, this is a problem. What technology can we use to address some of the problems? And just at the same time, towards the end of 16, I started learning about blockchain and started realizing that there was this technology that people have been developing that could potentially address some of the issues. So I managed to get a very small bit of funding and actually just went ahead and did a proof of concept. We worked with a company called ChainThat, I think Vikas is here, and actually did something. Rather than talk about it, rather than look at presentations about blockchain and try and understand it, we thought, right, let's just go and do it. So we mapped out the process, we created an application that actually set up fake brokers, it set up fake reinsurers, and we put a product together, we put a working product together. And the real benefit of that was, at the end of it, I had a 7-minute video that I could share and send to everyone in the company that really summarized it. So I didn't have to have eyes glazing over when I was talking about ledgers, but actually we could see very quickly what actually blockchain might look like. So that kind of led us to being part of B3I, which is where you've got, it started off with 15 insurance companies, it's now moved up to 38 insurance companies. And actually, when you've got that kind of critical mass, you've got a group of people we're all come together with a pure focus to learn about this technology and to test the technology. And guess what? You've got insurance companies and their panel of reinsurers are all part of B3I. And you've got reinsurers and lots of their customers, their cedants are on B3I. That tends to, when you can start actually getting that kind of interaction, that starts getting attention in the company. So I would say, if the question is how can you maybe get your company to kind of ears prick up and start taking note of it, just go out and do it. Do a proof of concept. Get involved. Actually be able to build up that business case, and you'll probably be surprised at the attention that you can get on it.
Okay, thanks, Jenny. I'm actually going to split straight over to Solomon here. Just to get him off his phone, actually. No, because it's very important. Simon's got wealth of experience, particularly financial services, banking. I think you have a reputation for. And I always think that as insurance companies, we should be looking at what's going on in other sectors and learn from them. So can you offer any advice of what you've seen on the banking side of things for adoption of this?
Yeah, don't stop at doing the proof of concept, right? So for my sins, I was in Barclays. We did a trade finance pilot, real transaction, £100,000 sterling, real customers, either side, but one transaction. And we did the consortium. We did 70 banks in R3. And what we figured out is we got the world's fastest horse riders to build a faster horse. And so it really comes down to who has the expertise. Is the innovation just going to come from within, or is it going to come from outside? And is it going to integrate to existing infrastructure, or do you have to challenge those internal infrastructure norms? And that was part of the reason I went out to found 11FS, is every time we tried to make the gaps between organizations go faster, we realized the problem was inside the organizations. So it's a double-sided problem. You can't make the outside go faster and not look at the inside as well. So thinking that through would be lesson number one. And lesson number two would be definitely look at other industries. There's a reason a number of industries have adopted permissionless blockchains immediately. There was an app, an insurance app for air flights, for flight insurance. I don't know if anybody knows the name off the top of their head. But what I love about that is it's a customer proposition. And if your flight is delayed, the insurance is paid to you more or less immediately. Nobody has to look at that. Nobody has to process that manually. I like that because it was happening on the public Ethereum blockchain. It was using open infrastructure that was there to use, rather than trying to build everything behind closed doors and try and get 30, 40 organizations to adopt it before you could do anything. Now, standardization is important, but I think doing things and getting things in the hands of the customers is much more important. That's what excites me.
So there you go. A quick shout out to Stefan Karpacek from Etherisk, who was on the panel earlier on, who was the flight delay insurance company who was doing it on Ethereum.
Oh, there you go. Etherisk. Stefan, you're a star, sir.
So it's normally Stefan who gives me the shout out, so it's nice to return the favour for a change. Okay, so we extend on that. Simon was saying there about moving on from POCs and so on. I just want to return the question back to Jenny, really. For the insurance market where you're involved, are you seeing us still at the POC stage, or are we getting closer to pilot and production now, Jenny?
So if 2017 was the year of the POC for us, we proved the concept twice, I think. And actually, the 2018 marks the time where we're trying to set up separate legal entities for the Marine Initiative and for B3I. And the plan is to try and get a solution in production, or at least running in parallel to the existing process by 1/1/19. So yeah, that is what everyone's working towards.
Okay, so if we change the angle now, I'd like to introduce the two other panelists. So Dan, from an Amlin perspective, you've got an interesting cryptocurrency, which I'm guessing at this stage is probably a daytime job and an evening job.
Yeah, 24/7.
Personally. So it might be worthwhile just you share with the audience where your interest is and what you're looking at in this space at the moment.
Sure, so I'm an underwriter at MS Amlin. I work on the cyber side. I came into insurance about a year and a half ago. I didn't come because insurance seems like a cool place to work. I came because it was so absolutely ripe for opportunity. I have a technology background primarily, not formally educated, but I can't remember a time where I didn't have a computer in front of me. I wasn't trying to learn something to do with technology, and it does take up all of my spare time. So coming to insurance, seeing the way InsurTech is, seeing the way technology is applied, just seeing simple data handling being done so badly across an entire industry just showed how much opportunity there is for not just this new piece of or novel new piece of technology, but basically any piece of technology that can be applied wholesomely to a commercial environment. This industry is ripe for someone to come along and just do it. As Jenny showed, you really do have to just identify where that new technology is relevant and just go ahead and do it.
And in fact, that's a fair point. I remember hearing a conversation from, is there anyone from Lloyd's of London here tonight? There was nearly a hand went up, and then I think they kept it down. They were being quiet. Okay. So in terms of technology adoption, the COO of Lloyd's once shared a story with me how that they appear to be the only organisation who's ever taken a bad process and applied technology to make it worse. If you'd like to know more about that, speak to me later.
Can I give an example of that? Because I do think what we've done is we've tried to digitize analog processes. And I see that happening in the London markets now. It's like, let's take this paper process and let's put a bit of this digital magic on it and hope it goes faster. And then realize, oh wait, we can't reconcile any of this. Oh wait, it's really difficult and it's really slow and we spent a load of money and we've got no results. Why is that? The thing with digital is we have to understand the virtues of digital. What does digital give us that we didn't have before? It's about real-time, intelligent, contextual services. And what do I mean by that? I mean, the thing can't be waiting for a process to happen inside one organization and then moving on to the next organization and happening in serial. We've got to redesign the processes. It's not a take the process and just put some code in and hope it works faster. And I think you're absolutely right with that point.
Okay. So,
but that's why, like, from a incumbent perspective, you know, it's difficult enough to get people interested in this kind of new ledger technology. And I'm pleased that we're investing time and effort into this kind of private permissioned area, but that's where we rely on entrepreneurs like Hugh that was just up here, who's actually looking into that fully decentralized insurance model. But I actually can't get my head around some of the things that he's talking about and how that would actually work. So I'm really excited that other people are trying to do it and we can watch and learn and really see how it works.
so maybe it's a good point to introduce Reese from Paragon from a broker perspective, because you're doing some quite interesting thinking in this space. Because it was interesting, Stefan earlier on was talking about the inability to get insurance. What's your thinking around this at the moment?
Yeah, my personal background is sort of 15 years in insurance, 5 years in London, thus the Australian accent, and 4 years in fintech. And we were drawn into this space because we were trying to solve problems for clients. And we have effectively tried to move ahead of the game and learn a lot about private key storage, a lot about how crypto works, a lot about ICOs and the litigation risk that comes out of that. And so we've built up an incredible depth of capabilities, hopefully, that can be shared amongst this community and certainly can be shared to our underwriting colleagues to help find client solutions. So we have worked with, we placed the first crime insurance policy into Lloyd's for the storage of private keys for a large US wallet, many of which you'd know. We've worked with a trust company that was listing their trust on the New York Stock Exchange, and they wanted to effectively peg an insurance contract against the value of the securities in the trust, and we worked at making sure there was back-to-back insurance coverage. That was all about investor confidence. Like an exchange wanted basically what was an FDIC backing. The trust wanted the confidence of the shareholders to be able to take shares in the trust. And effectively what we were doing is we were insuring the private keys on the blockchain. Today I was working on ICOs, so we've looked at the securities litigation risks, the viewpoints that the SEC have, the viewpoints that the FCA have, and we're looking at what are the directors' obligations when they take an ICO to market and what legal risks do they face. So I think Paragon's great at two things. We invest in our people and we try and hire people that are experts, and we also invest in growth markets, and that's why we're really excited to be here tonight, because we are solving these problems. We work with clients every day. We do buy insurance for crime, for executive risks, for the risk of litigation. So to hear that there's an attitude that you can't get insurance, that's just not fundamentally true. It just means you're going about it the wrong way. In London, you have the world's epicenter of insurance capabilities. If any of the entrepreneurs are here, their strategic advantage from an insurance point of view is that they are sitting on the world's deepest, most experienced marketplace. And deals can be done, and it's about understanding the process. And where we are in the cycle right now is we are on an educational curve, and there is some way to go. My personal view is 2018 is the year that you will see insurance contracts become a lot more accessible for blockchain startups and crypto.
Can I ask a brief question? Because we've seemed to have talked to two purposes there. Because what you talked about is doing the business of insurance in crypto markets, and so ensuring things that are happening in the decentralized world versus transforming how insurance is done using the technology. Are those two different things, and how do you think about those two different things? Because I think that's an interesting dichotomy to play with.
And it's something that I think it's an example of how we should be eating our own dog food, I think is the phrase that people mistakenly use. But yeah, if you want to address that.
Yeah, absolutely. They're fundamentally two entirely different things. One is about working on optimizing business and improving business systems and making smarter new entrepreneurial companies. And I suppose my experience is more about solving clients' problems. As I always like to say that the insurance industry lags the investment industry. So what we're seeing now is investment has gone into crypto and blockchain, and these companies are being born and starting, and the insurance industry, from a pure risk underwriting point of view, responds to that. And so it's one leads and one responds. The insurance industry doesn't create the risks, they transfer them. So our role as Lloyd's brokers and as client advocates is really about listening to what the challenges are. For instance, the trust that I work with that wanted to list on the New York Stock Exchange, they had a very simple problem, was we need the confidence of the SEC, we need the confidence of investors, and to do that, we want to know that if there was a loss of the assets that were held in the trust, that therefore impaired the stock price on the New York Stock Exchange, that our company would be indemnified for that theft. And we're talking about real risks here. We're talking about the theft of private keys, or we're talking about the legal risks that exist. These fundamentally aren't new risks. They're just about adapting and educating the market on the unique aspect and the unique protocols of blockchain.
So if I can pick up on that, and I'll ask Dan in a moment. You may have seen one of the first slides I put up earlier about the London insurance market is actually, it was the first market to insure aviation in 1911. I think it actually insured Charles Lindbergh's cross-Atlantic flight. So, really innovative stuff. Then in 1965, it insured the first satellite launch with Intelsat 1. So the London and Lloyd's market is truly innovative. It's really into the emerging risks type space. And we've got representatives here effectively from the spectrum of that London market, from the broker, the underwriter, and the reinsurer in some ways. But from the underwriter perspective, I was going to ask, what's the appetite to start insuring this weird and wonderful thing called cryptocurrency?
Well, appetite is self-defined. Every underwriter knows what they do and don't like. But in the crypto space, to go back to your earlier question, they are distinctly different. And from the underwriting side, it is purely risk management, like the rest of underwriting. The only difference and implications for us is we have to ask and answer questions that may have been asked, but kind of as rhetorical questions. We now have to have an answer for it. We need to be able to put a number to it, and we need to be able to underwrite off the back of it. And that's what's really been the new aspect of it. The difference between maybe us and other underwriters is we've just decided we are going to take a proper look at it. And that is the first step to answering and finding answers to the important questions in what is a new class, effectively. It can be put back into traditional classes and maybe will over time, but whilst technical expertise is lacking in underwriting houses, it's probably going to be there will be one expert or there will be one person that thinks they know what they're talking about within that company, and the traditional classes of business will come consult with that person. And until there is a broad, general understanding with some experience in the market, it is going to be a niche subject, and I imagine it will just go back to what will be traditional business. So
that probably links in nicely back to Reece again, really. What's your experience so far? Because we're hearing quite an innovative and forward-thinking underwriting perspective there. What's the general consensus in the market? Is this the only one who's entering this space? Are there other underwriters, syndicates, managing agents who are taking a stance on this yet?
It's fantastic to see representatives here from MS Amlin. They're obviously in this space, and that's reflective of the fact that they're here today. our viewpoint of appetite, we look at it on the aggregate. So the marketplace is deep, and we effectively can segregate that into three groups: the early adopters, the fence sitters, and the laggers. And so what we do as brokers is we negotiate within that playing field. And we have invested in hiring outside parties to come in and self-educate the market, and that helps them to choose their risks better. At the end of the day, Lloyd's has dealt with new and novel risks for a long, long time, about 300 years. The dot-com boom was no different. We saw a lot of tech companies coming into market there with new and novel ideas, and that was in the 90s. And this is a similar emerging technology that the marketplace is responding to. Now, insurance is a pretty simple contract. It has an operative clause that pays out upon certain events, and it has a premium. So the way that they're selecting risks is they're trying to differentiate between who are the credible players and who are not the credible players. There is a stigma that is, and why I say 2018 is the year of blockchain happening in the market, is because that stigma is getting further and further in the wake of the boat that is the blockchain sort of movement. And Lloyd's from a corporate point of view has, 4 years ago when I was doing this, Lloyd's, you essentially had to go and ask for permission to start writing this. Now, it's a simple due diligence around what are the AML KYC procedures at that company. And so in that space of time, what we've seen is a movement from a big handbrake to what is an appetite for, if this is real legitimate businesses and people are building credible companies, then yeah, we want to work with them. Yeah, we absolutely want to be able to underwrite that risk and earn an income from it. But at the moment, the reality is insurance has a large payout and a small premium. So you have to get spread within your portfolio. So underwriters will naturally look to pick their portfolio and pick their clients wisely, and that's our job as client advocates to do that.
So if we can just go back to the point you're making about effectively 2018 being the year of implementation in effect of blockchain. But coming back to Jenny again, because she's got the strong experience on the whole DLT side of things as opposed to the insurance or crypto side of things. And it was interesting that Stefan in the earlier session, amongst the many things that he said that we won't requote, was don't look at the costs, look at the kind of opportunities. But the reality when you're trying to pitch this to a COO or a CFO, they're going to ask about cost savings to begin with before revenue generation, because they're always going to go, I don't know, Jenny, have you any exposure to actually how would you justify the cost savings in some way on this?
I think I'm going to have to be suitably vague on this, but I have at least got a number. A lot of work that we did on the B3I side, we've still got a hardworking tech development stream, but we also had a business analyst stream where representatives from each of the 15 basically sat in a dark room for far too long trying to estimate and really put a number on the real cost savings that we thought that the market could achieve as a whole. And lots of debate ensued, but the view is that when it comes to the actual administrative cost savings that we think that we could realise for the outwards reinsurance market as a whole, we think it can be up to 30%. Okay, so that's not 1 or 2 points of continuous improvement that we're all striving for. That's a third of the cost that we think that we can cut out of that entire process. So it's those kind of numbers that actually, yes, at the moment it is pure investment. It's people, it's moving resource over to a very speculative area, and it's paying for development of software and development of these DLTs. But when you start with that kind of number, you really have to sort of sit up and pay attention.
And Simon, you wanted to add something to that?
I was going to say, and bear in mind over what time horizon as well, because I've seen this movie with the bankers. We saw this in 2015. We saw that 30% number come up, and it's 2018, and those cost savings haven't been realised. But that's not to say they aren't real. Those cost savings could be real, they just might take a while to get to, and is it worth taking the time to get that kind of cost saving from your organisation? Yeah, absolutely. That's a heck of a cost saving, and what does that mean for customers? So I think some execs tend to get fatigue on it, and has it delivered yet, which is why actually a best of both strategy is something I'm recommending to a lot of my clients at the moment is, actually think about how in your day-to-day business, how do you profit from the fact that crypto is out there, crypto is a thing, and do you just do the job you do today with your existing middle and back office? But then also, what do you learn from it, and how do you transform over the 3, 4, 5-year time horizon? And what are the pilots that you need to be doing, and what are the propositions that you can be putting in customers' hands to test that today? So I think that number's real, but let's bear in mind the time horizon and how you buy that attention with executives, and move it away from being Bitcoin bad, DLT good, into this, actually, no, Bitcoin maybe is a legitimate industry that we can be insuring and at the same time learning about to transform our own industry.
Right. So I'm going to flip this in a moment and give an opportunity for the audience to ask questions, because sometimes that actually generates far more interesting debate than anything I can drive. But I am going to ask for something in the spirit of Twitter. I'd like you to prepare any questions to be 280 characters or less. Okay? I'm just going to ask one more question of the audience, so start thinking about your questions now. And the thing I'm going to ask for each person quickly is, in their experience of what they've been working on today, what's the biggest surprise you've found?
Well, for me, the biggest surprise is that I was buying reinsurance 18 months ago, and now I'm sat in front of a fairly large group of people talking about blockchain. So that's been a bit of a surprise for me, I have to say. But yeah, actually, just general interest in the topic. It stopped from people rolling their eyes to actually genuinely sort of contacting me to try and learn more. So that's been a very pleasant surprise.
Yeah, the speed and magnitude, much like Jenny was saying, is the most surprising thing. I went from having one submission ever to having maybe a 3-week break to getting battered with 10 a day, easily. Wow. And that's been every day since about November. Wow. Yeah, the volume, definitely.
Yeah, I would absolutely echo that point of view. My desk is, and the inquiries that we've had from clients have been very much focused on the ICO space of recent, and the directors and officers and the regulatory risk around that, and how can we hedge against that. And it's gone from 1 to 2 to 10 really, really quickly. So that's been my biggest surprise.
I haven't done any traditional cyber underwriting in about 3 months now, just to give you an idea of how much of it's taken up on my time.
I've been surprised. I think similar thing, how quick this stuff got legitimate. It went from senior exec, crusty, doesn't like it, doesn't trust it, to it's real in almost no time whatsoever. And also then the delta between what senior executives think and what regulators think. When I talked to, we saw the SEC and the CFTC yesterday basically saying this innovation we must first do no harm with. People thought they were going to kill blockchain and crypto. They did the opposite. They sort of welcomed it but said, just don't be stupid, we'll deal with the fringes. That was hugely surprising to me, and I think it's a signal that cryptocurrencies, this thing that everybody wanted to get rid of and just focus on the technology, are a big part of the innovation. And to see large institutions wrapping their head around that and working with that day to day, that to me is the surprise as to when it's happened. I thought that was going to take another 5 years.
That's great, and that reflects my view as well. To hear a Senate commission in Washington yesterday with CFTC saying that the genie is out of the bottle, so we need to deal with it as we go on. Okay, so you've heard a really interesting spectrum of perspectives here. I'd like to open this out to the audience now, but remember, keep the questions short and not sales pitches, please.
You and I think everybody else on the panel keep talking about this being a new technology, emerging technology, and novelty. But as I think you said right at the very beginning, this is 10 years old. So what is it that over the last 10 years has prevented such a sort of organic rush to adopt blockchain technology? And can you point to a single game-changing application in that time, other than cryptocurrency, which I appreciate is a very, very appropriate use case?
So I'll quickly start and then I'll open it out to everyone else. But I'll say 10 years in technology is actually not that long. The Wright brothers in 1903 flew the first aeroplane, and it was about 8 years later that Lindbergh flew a 2-seater aeroplane. The pace of that technology was very slow. The pace of this technology is astronomical. You know, probably if I finished that presentation if I completed it last night, it's probably out of date this morning. So things are moving fast. But in terms of actual adoption, any thoughts from you?
I think ARPANET to internet to World Wide Web to mobile to like when did the internet become transformative? Was it when I could go on the internet in '93, or was it when people in Africa could use it for the first time? Everybody has an answer to that question, and it feels to me like your answer to the question is not quite yet, and it seems like it's taking forever, and we feel like it's fast. Perspective is an interesting thing. It tends to be written more by historians than by anybody. I suspect what we'll do is we'll look back on 2017 as the year that crypto really arrived because of the cryptocurrency side of it. But at the same time, it's still got a way to go. It's still young. I mean, we don't judge a 9, 10-year-old child by what they're going to do when they're adults. I do think it's got that sort of time horizon before it's usable every day. Facebook was a number of years old, and it was standing on the shoulders of the internet before it became a thing.
But why is it not usable? What was it 10 years ago we've now got that makes it usable? I don't understand.
A whole bunch of infrastructure. We have custodian wallet services, we have usable exchanges at scale, et cetera, et cetera.
You're talking about cryptocurrency. Most people are talking here about the use of the blockchain in the execution of insurance contracts.
Sure. So in that case, then, with DLT, Corda was only at 1.0 mid-part of last year. Hyperledger hit 1.0 mid-part of last year. So these technologies for private DLT are about a year old. They're not 8, 9 years old.
Yeah.
That would
So
be the main difference.
Ethereum 2014 with smart contracts, beginning of the thing. So it's only a couple of years. Sorry, any other thoughts?
Yeah, on the same line of what's been going on for the last 8 years, and is this new? It's not. It is old pieces of technology that have been combined in a novel way to produce something else. That is the majority of what goes on the internet. We actually use pretty old technology across the board. It's just new uses for them, updates to them, and combinations of those technologies is what produces new technology going forward. It's very rare we come across something fundamentally unique and original.
Yeah, completely agree on this is a culmination of certain types of technology that have just all got to the point where they can all kind of work together to create this movement. But you've also got just the best minds in the world who aren't doing it for money, because they've probably all made enough from buying in Bitcoin and at ridiculous prices, but they're doing it for the love and joy of solving this huge problem that we're looking to solve. And so actually you've just got this real sort of critical mass again of minds of people trying to solve the problems that we're looking at.
More questions? Hands? One over on there.
Thank you. So you spoke about the front-end innovation, let's say for the consumers with the smart contracts, as well as about the back-end, the cost savings and the infrastructure of insurers. If you look forward to the next 3 years, so let's say relatively short term, where would you sort of think that the adoption from insurers will be faster? Is it really on the more tangible cost savings, or is it more on the uncapped potential in the consumer space?
Should we talk that for Jenny, if anything, because she's got the experience on the insurance side of things, I guess.
I really hope that both move forward. That's a really lame answer, isn't it? Cop out. But I've got to think that the Marine Initiative and the B3I Initiative are going to have some real tangible results in the next year, 2 years. But I also really hope that we're able to start insuring and reinsuring some of these new emerging risks.
Yeah. So I just want to add, I think you've got to think about the core of the organization and whether it's an analog paper process and how integration looks. Because if we've got a shiny new DLT between everybody, but the internal process is still slow and manual, that's something that we've got to think through. And I know it's designed to reprocess those and to rethink those, but actually the customer-facing proposition that actually has a new platform behind it has the best chance of success, because it's not the temptation to just use that vendor, just use that contract we have with these people over here, just integrate to this system that we've already got. It's too hard to resist when you're using existing infrastructure. So you want to think about the end-to-end process, and you want to think about what do I stand up alongside the existing organization that takes advantage of the new world in a non-competitive P&L. And this is what I'm seeing in the banking world more and more, is people have realized that their planet is dying. They need to get off the planet, but they've got 10 to 20 years to do it. Let's build that new business, grow it slowly, and gradually flip between the two. And I think we'll see that approach start to emerge.
So it sounds like a few people should have been on Falcon Heavy last night as it launched. Okay, more questions? Go ahead, Peter.
Very quick question. How do you deal with legacy technology?
How do you deal with that?
It's insurance's biggest problem, by far. All of our data problems, all of our processing problems, everything is subject to the legacy systems that we use, whether they be an actual computer system or just a process that people are having to interact with. Lloyd's is one of the biggest hindrances, in my opinion, to legacy systems and the problems we face with it. If Lloyd's were to say, you do not interact with us unless you adhere to this, this, and this, this is the new system, this is the new way, there would be, people would come around to it. The reason why there is sporadic legacy systems across the industry is because we have individual players of differing sizes saying that we're going to do it my way, and that's the only way we're going to do business. And it's really hindered any progress and innovation in terms of progressing those legacy systems and all the negative aspects of the current processes.
And my experience in the past from a number of different industries is that it's not the legacy systems that are the problem, it's the legacy processes and the legacy people. Legacy systems move ones and zeros, so you can change those. Changing people's mindsets is a bit more of a challenge. Okay. More questions? Yep.
What about blockchain and DLT? Or companies actually out there trying to insure against cyber risk directly linked to Bitcoin, other cryptocurrencies, loss impacts, and those types of things?
That's what you guys do, right?
Yeah, the lot, literally the lot, everything. Traditional insurance, directors and officers coverage, maybe some crime, employment practice liability, really vanilla, plain, ordinary insurance coverage. But there is this new element of there are some questions we need to answer. What is a digital currency? What does that mean in terms of fiat currency at any given time? As an insurer, we are looking at a year-long period of what the value of something might be or what the processes might happen over the year. But traditionally, either for the investment side or maybe some of the startup cryptos we've seen around here, they're kind of looking at the spot price value of any cryptocurrency. And actually that means you don't have to really consider some of the longer term implications or the risk management implications where you're kind of guessing what's going to happen over the year. So there's a really big variance of old and spanking brand new.
Yeah, I'd support Dan's comments. The short answer is yes. I see two main motivations for buying insurance from blockchain companies. They either fall into the traditional motivation, which is a traditional hedge against litigation risk, against fraud, against a cyber hack. They either fall into that traditional motivation, which is a balance sheet hedge, effectively, that's what it is. Or they fall into a second motivation, which is the blockchain company itself has some fundamental underpinning value where they can increase the value for that company by using insurance. The trust company that I referred to was doing that. They were using an insurance contract to build investor confidence. Exchanges often look for an insurance contract to be akin to an FDIC backstop for customers. So there's two motivations really for buying insurance. One, the traditional hedge, which is a hedge on your balance sheet for any entrepreneur. Or two, a fundamental value add to the business that you're building.
Also, one third category, ICOs that raise so much money they don't give a toss how much you charge them and what they're buying. They just want the lot. That's it.
It is going to be an interesting one. If you've got £10,000 worth of Bitcoin, how do you get the cover for that 9,500? Because by the time the risk has been placed for that 8,300 and it's 7,600, if they're still using paper-based systems, they're going to struggle with that. There was another hand up over in the corner, I think.
Yeah, it was a pretty open-ended question, really, but you were kind of talking about legacy processes and people, but how should we be thinking about talent management and thinking about the future from a people perspective, and how do we start to kind of bring those people into our companies?
So the way we do that with clients, full disclosure, we work with a tier one bank who's doing exactly this in the UK. They're building a challenger brand alongside their existing organization in a non-competitive P&L, and they want to appeal to a generation of customers they can't currently attract. Either if you're in business to business, it might be more of a startup focus. If you're in kind of the consumer market, it might be a younger focus you were going after, or an immigrant focus you were going after. Have the proposition and start at the customer, and then attract the talent to the proposition rather than attracting them to technology or need. Once you've got the proposition figured out and you know what customer problem you're going to solve, getting talent is actually relatively simple. That's what we found, certainly. And once you start solving that customer problem and getting momentum behind it in an organization, once customers start buying it, then the difficulty making the argument for why you should do this thing starts to go away, right? So if I'm supporting a legacy platform and I'm trying to do a new proposition on it, I know how to do that, right? And I'm going to get so far, but I'm going to do it with my existing people and my existing processes. If I do something alongside it, that thing has got to wash its own face as a business case pretty quickly, otherwise it's going to get killed. So I have to figure out a way of getting product in customers' hands quickly, that can, with a business case that washes its own face, that can gain confidence with execs, and do it in baby steps. Start with just a workshop, move to putting something in customers' hands in 12 weeks, and then once you've done that, do 3-month sprints and 3-month sprints and see if the product grows. Think about how a startup would work. A startup would get seed funding, and at seed funding, it would try and build an MVP. After seed funding, it would go for an A round. Its A round is, can I get traction, can I get customers? Its B round is, can I scale this proposition to some sort of degree? It's using that model, but using it inside of a larger organization. It's an interesting thing to think about.
Can I just add that, so from a Lloyd's or London market perspective, how does that work? Is that in our own broking, underwriting houses, or is it a Lloyd's governed thing? Where does that sit?
I don't know where it sits, but I know you've got customers.
I'll probably quickly offer that the starting point is educating people about the idea to begin with, which is why you do events like this, and you get people here coming along, listening, and some people are kind of like events just advocates, and they come to all sorts of things, but you keep bringing a few new people, and they go back to their office, and they talk about it, and it builds and builds. But Jenny, I think you were going to add something on there.
Well, actually, I was just going to say that, Dan, you're probably a great success story for that then. Like, if you've come to insurance not for the love of it, but you've seen something...
Because it's a mess.
Because it's immense, obviously.
A mess.
Oh, right, a mess. Right, yeah. But actually, maybe turning the question around and saying, right, we need some help. This is a great challenge to get your teeth stuck into, and inviting people like you in.
I was just going to say, Simon gives the wonderful perspective from the very logical banking and finance industry. Insurance isn't like that. We have the biggest barrier. We don't, end customer, fine. We really try to be client-centric. We try to provide the service that we say we do. But when you're walking around in the office, do you really think fat, grade, senior people in the company are really thinking about the end client?
I can see the truth's coming out now.
The way you get across those legacy systems and processes is a combination of two things. One, community and education. So it is actually sitting them down and talking to them about it to the point where they actually get it. Bearing in mind, they've had 4 years of having the word blockchain rammed down their throat by very expensive consultants and come out of very long seminars without having a clue what it is.
I would like to say I describe myself as good value, not very expensive.
And Gary is the perfect person to be putting things in layman's terms, but that's what's needed, and that is not what's been available. The other thing is, and I heard this in a digital forum thing that's going on in InsurTech, which is make the golden parachute bigger. There are clear blockages to innovation and progression in the insurance industry, and that is because of the status quo of the senior management and almost the incentive to protect the current way processes are done in insurance. You bring in these new technologies, these new younger talents, and the disruptive cryptos that we've seen talking up here, and it gives them serious cause for concern because they have no reply to that other than I see my time coming up now.
And I think that talking of time, that closes down nicely on that, really, because we're just on time. I think that the key thing, as someone once said to me, if you can't get the people to change, then you need to change the people. And that might be part of the thing about this thing. So I'd like to say thank you to everyone in the audience for the questions. Thank you for listening. Thank you to the panelists. And I'll hand back to Seb.